And we're back. Part two of episode 13.
Or episode 14. You can call it episode 14 or 13, part two. We'll see what Spotify lets us do.
13A, 13B. All right, so we're back. 10 more questions. Julie, what is the first, or I guess number 11 of the count?
Real estate is always a safe investment. And you are a real estate mogul, i.e., you have one rental property. So maybe you're best fit to answer this one.
So, no, I'm just gonna go ahead and say no. So I've had two rental properties simultaneously. And I tell everyone that once again to real estate, it's like everything else. Like it's not, Instagram and social media make it look like, oh, I just buy a rental property and I'm setting sail with passive income. Like you have to work it like a job or worse. I had two rental properties and both of them within 5 blocks of where I live in Brewery Town. And I couldn't stand it. It's not for me. I don't think it's a safe investment any better than any other investment. I think some folks probably just feel a bit better because it's like a tangible real asset, right?
Exactly. And there's so much nuance to it. It could be successful based on the neighborhood, based on the city, whatever it may be. But there's a lot more than just the numbers. Even when the numbers make sense, if you have a leak, if you need a new fridge, that can blow up your bottom line for that entire year. Uh, a friend of mine had one, and it was a duplex. The bottom was empty. The person in the top broke into the bottom and squatted there during COVID, so there was no way to get them out, and there was also no income coming in from the property. If you have 2 years of that, that can break you. So there's a lot of nuance to it. Folks like it because it's easy to understand. You put money in the house gives you money back, but they forget all the other costs associated: taxes, upkeep. You get called at 3 a.m. because there's a leak. What else? Have you ever had any issues with yours that were maybe a little more unforeseen?
Oh yeah. I mean, it's sometimes I would think the rental properties were collaborating each other. Like both refrigerators went out both at the same time during Thanksgiving week while I was away in Chicago. Roof leaks. I mean, and this is obviously a very like just like my kind of experience, but if you want to do it, I know a ton of people who are extremely successful in real estate, but you got to work it like a job. And sometimes I would question if people feel the same way if their home had a ticker symbol, right? Like people look at stocks and it goes up and down every day, but if you had that for your home and it moved up and down, I think they would feel a little bit different about it.
Exactly. And the one thing folks always say is, when they say I got to stop paying rent because I want to be my own bank or something like that. They're always there. I understand real estate can be very compelling because it's easy to understand, but there's a lot of nuance to it. There's a lot of things you don't always see. Those that are most successful with it tend to be very handy and extremely hands-on. So if you're about to retire and you haven't done it before, it may not be optimal for you unless maybe you check all those boxes, which are a lot. And then there's, of course, a lot of cash outlay because it is very isolated. One property might be $400,000 instead of if you're buying investments and you're putting in 400,000, you're diversified across thousands of companies.
Yeah, and that's a good point. When people look back and say, "Oh, my parents bought this house for 90K and they sold it for 400." When you like take out inflation, you take out the costs, taxes, all that stuff, it's not that big a return. And don't get me wrong, I'm not against like home ownership, but I just, there's just this kind of like thought that real estate is like the easy, and it just isn't.
Exactly. If you're making 200 a month, sounds wonderful. Kudos to you. But again, if you need a new fridge, it's gone. If you're making 500, where's the line between what will actually be cash flow positive when things are a little bit rocky? Um, and then have you evaluated that before you purchase the house? Have you gone through it at all as you go? Everybody's always got a story, right? A friend, a cousin, an uncle who is stellar at real estate or stellar at whatever it may be, doesn't mean that it applies to everyone on Earth.
Very valid point. And I would say one last thing, and then we can move on. So I just pulled up this chart. It says the growth of $100 by asset class from 1970 to 1923. So wild guess, obviously, what do you think if $100 in the S&P 500 has grown to 22,000? What do you think the real estate would have grown to?
Is it high or low? I don't know. 15, 10 from the 70s to now?
Yes, $100. Like, just give me a number. Just get
$10.
no, much lower. One second guess, much lower.
No, give me the answer.
$1,500. So, and this is based off of the Case Shiller Home Price Index, but just to show you, $100 in the S&P 500, 22,000 Home Index 500. Obviously, this is like very kind of boiled down, but again, real estate. If you want to get into it, do it, but you got to work it, right?
It's
like
another job. If you want another job, awesome. It can make some money, but it's not passive income. There's nothing passive about it. I'll take the next one. Or I'll ask you the next one. Tax planning is only for the self-employed or business owners.
Again, no. It is for everyone. If you pay taxes, you should be tax planning, point blank. Yes, do business owners and self-employed might have a little bit more wiggle room with things they can do, but we do tax return. We help with a lot of our families with tax return reviews, and some of them are W-2 employees, and we always, not always, but we find things that they can be doing that's more efficient.
Exactly. We talked about in the last episode contributing to a Roth or a traditional 401k based on your timeline, expected earnings, expected tax rate. Folks that applies to don't have to be self-employed or business owners. It can be more impactful if you're self-employed or a business owner, but doesn't mean that you can't save thousands of dollars over your lifetime if you're just not proactive as a W-2 employee.
Exactly. And there's so many tools out there that everyone should be always considering, right? Roth conversions, backdoor Roths, tax loss harvesting, you name it. So, tax plan. If you pay taxes, you should be tax planning, point blank. Moving right along. Saving for college is only possible if you earn a high income.
Of course not. Everybody can save either for themselves or on behalf of their kids. It's something that is very accessible, 529 accounts, even just a traditional investment account or a custodial account. A lot of different options out there from a tax perspective, but everyone can save, of course. We work with a lot of great parents who love their children and want to do that. And it can make a lot of sense regardless of where your income is. What would you add?
Yeah, I mean, it again, there's always a spectrum. There's some families like, listen, I had to kind of bootstrap it myself through college. It kind of built character. So my kids are the same. There are other people who said, I want my kid to spend $1. We want to take care of it. But these 529 plans are very flexible. $25 a month, $50 a month. So yeah, if you want to start saving, there's no way. And also there's codes now, right? So a family we just helped, there's a link. So, hey, it's a birthday or, holiday gift. Hey, go to this link, contribute to my kid's college. So many ways to do it.
That's what I tell a lot of folks when they're having a kid is, yes, you want a lot of baby clothes. I'm sure. Wonderful, very cute. But maybe after the first 5, you're like, hey, you want to put $20 into the 529 instead. But everybody's different. The one thing we do always say is if you are a parent, put on your oxygen mask first, right? So focus on your retirement and financial future first, because if you have that taken care of, you'll have a very strong understanding of how much flexibility you have to help your child, son or daughter, with college. Because it may come to a time where things are tight at first, you don't have as much to put into the account. But then if you're doing everything right, when you are 50, 60, and they're in college, you then have the ability to pull from these accounts a lot of times, or use your higher income because they're the prime earning years to help assist. I know this is long-winded. We even have some folks. We even have some folks who their children get student loans, and then they help pay them off because they know that at 65 or whatever age it may be, they're in a very strong financial planning position because they did a financial plan. So it's not all clean cut. It doesn't all have to be ahead of time or during. Sometimes you help your kids after.
Very good point. And one thing I would say, and this goes back into the previous episode, go back and listen if you haven't, talking about people who should pay down their debts before investing. It's, you know, you can borrow for college, you can borrow for a home, you can borrow for anything. You can't borrow for retirement. So, same thing when it comes to saving for college, of course, we encourage it, but as long as it's not stopping you from, making sure you're hitting your financial goals as well.
Exactly. And we even work with one high earning family who they have the money to pay for college, but to emphasize the value of an education and the cost associated with it, they had their children take out student loans. And when they got the degree, then they helped pay it off after the fact. Essentially to say, every semester you're going to have to look at that bill um, and really realize that it's $30,000 and you're going to have to apply for that loan and get that rolling. And then they help them after the fact to emphasize the importance.
I like that. Skin in the game. I like that. That's cool. All right. What's the next one here? Oh, disability insurance is only for high risk jobs.
I'll have you take it. What do you got?
Ooh, so again, no. Um, disability insurance is for honestly everyone. If for those who are not aware of what disability insurance is, it's actually kind of I'd say the younger brother of life insurance, right? It protects your income. So heaven forbid something happens to you in an accident and you didn't die, but then you can't work, you know, you have income to protect yourself, right?
Absolutely. And what I would add is that, yes, if you're building skyscrapers, you want disability insurance. If you are working in an air conditioned office, you still may want disability insurance. It's not going to be as expensive as the man up in the crane, right? It's going to be far more cost effective. So it's certainly prorated and correlated to your actual position. If you're in a risky one, it's going to be more expensive. Less risky, it's going to be less expensive. So there's no one size fits all answer.
Yeah, and that's a good point. And just a quick note, just because insurances can be difficult, makes there's a lot of different things called about policies called own occupation, any occupation. So depending on the policy you have, if you can work any occupation, sometimes it may pay out. If you so there's things to look at, but anyone can unfortunately have an accident and not be able to work. So disability is important to protect your income.
Exactly. And if you're a surgeon, you don't want any occupation, right? You want to make it so that if anything were to go wrong and you can't be a surgeon, then it pays out. Not that they think, hey, he can work it at the gift shop down the street. He's fine. Um, that's a little bit of a zigzag, but
Yeah.
but it is hard to know. The terminology they throw around can be confusing for folks. Um, Next one. If my spouse has a retirement account, I don't need one.
I mean, also middle of the road. Uh, we work with a lot of families where there's someone that was like the breadwinner and someone was the homemaker, and they're a unit and they work. And the retirement account pays for their household. But to be devil's advocate, what if they separate? What if they weren't? But again, depends on the situation. But if that retirement account is meeting your goals, then I'd say okay. But it's kind of like that 401k question. It really just really depends on.
Exactly. In my experience, it's usually said because someone doesn't necessarily feel like going through the effort of understanding either their benefits or how to open an account or whatever it may be. Doesn't mean it's wrong, but if you determine that you don't need one because your spouse has a retirement account, great. If we just say it off the cuff, maybe let's take a look and see what the actual plan says or what your benefits are. Are you giving up a match? Um, are you giving up different opportunities for tax savings? You want to know what the actual answer is before we just maybe toss one out there. Next one. A will is enough for estate planning. I don't need a trust.
Yeah, obviously another very nuanced question. I would say trusts are oversold, right? There are a lot of people out there, they reach out to us, say, hey, I think I need a trust because I saw something somewhere. And I would say some folks think they need trust more than not, but it really depends on your situation again, right? Everyone's financial situation is a fingerprint to them, but if you're just a W-2 employee, you got some retirement accounts, you have a single home, it's likely you maybe only need a will. But again, there's so many factors that might say, oh, you know what, a trust might make more sense.
Exactly. I think you nailed it.
Thanks. I feel great. I feel great on that one. What's the next question? You should avoid debt at all costs.
Anything in absolutes is usually not right, right? It's always middle of the road. That's why politics are so divisive because everybody believes a little bit of everything, right? Um, but no, you shouldn't avoid it at all costs. You should be very cautious of when you take on debt because the difference is that debt can break you if you are either too much debt, too high of an interest rate. Um, Part of the reason Warren Buffett is so effective and has had such a great track record is because they don't take on debt, right? They essentially continue to buy, have a lot of cash, and allow it to roll. Doesn't mean it's the only way to do it. You look at other companies that have started and ended. A lot of times it's because they took on too much debt. Uh, are you familiar with long-term capital management?
No.
Less familiar. So 1998, it exploded essentially, and they had to be bailed out by 14 banks because they took on too much debt. They were levered at like 25 to 1. It sounds crazy, but they were making so much money in the prior years that everyone was like, "Oh, this is a lock. We're guaranteed, right? This is going to climb 20% a year, no problem." Things went south on them, and when things go south and you have debt, it's multiplied by how much your upside was multiplied by. So they essentially just rapidly deteriorated, almost took down the whole economy. Um, but that's what debt can do. Higher upside, much higher or lower downside.
Yeah, I mean, one, that's a great story. Thanks for sharing that. And also, I feel like this question was written by Dave Ramsey. This is a Dave Ramsey thing to say.
I don't think Dave Ramsey is wrong about a lot of stuff, but the clientele that he caters to is important to note. You
I'm gonna
know,
say I think he's wrong about a lot of stuff. He's just so black and white. He's like, you take no debt, you never use. I'm like, no, that's like there's nuance to it. So
I think there's a demographic that's what you should do. If you are at a certain point, you don't need 3 credit cards. He emphasizes cutting up your credit cards, but for the families we serve and folks in a certain bracket, it's absolutely a tool you can use. It's just easy. We all get the mailers where it's like 0% for you can get 10,000 at 0% for 6 months, and a lot of folks can't say no to that, and then they also can't pay it back because the income's not quite there.
I guess that's fair. We'll move on. No, all good points though. 19, second to last. You can time the market and make better returns by buying low and selling high.
It's that simple. Buy low, sell high, or buy low, Liberty One Wealth Advisors, sell high. But no, it's never that easy. You don't know when the bottom's going to be. You don't know when the top's going to be. A lot of times someone will move their 401k to all cash and they're waiting for the market to drop so that they can buy. And then it never drops. You hear stories about folks from '08 who never put money back in, and now they're just essentially floating along, like they're lost in the Pacific Ocean, just never going to be found.
Like Tom Hanks in Castaway.
Exactly. Was that too much of a? It's easy to just get lost, and there's a lot of charts and data that shows time in the market versus timing the market.
And I would also like to add to that. It's who knows when the when low is and when high is, right? When we look at let's look at the market as of late, right? We're hitting highs, but it's just you get into that guessing game, you're never gonna or the worst thing, it works out in your favor.
Yeah.
Like what's the guy from The Big Short who's been calling for a recession every other year since then?
There's like Kiyosaki. Oh,
Yeah,
Mike Burry.
Mike, Mike Burry.
Kiyosaki's nuts,
Yeah,
but Mike Burry.
Kiyosaki's, but every other year because they got it once. Every other year, like yeah. So don't time the market.
Plus, I would say, what if you're wrong? And that's a question you should be asking around investing all the time. Is I love this stock. What if you're wrong? Because we can all be wrong at some point. And if you are over leveraged or all cash or anything like that, and it will really bury you, you have a problem. It'll Michael bury you like that. But what if you're wrong? Because you can't know the top or the bottom. Investing is a test you do not get 100% on. You're trying to get an A, but nobody gets 100%, even Mike Burry.
Yeah. What's a statistic? 4 out of 7 stocks underperform, something like that.
67%. So 60%, 7% underperform the market. So even if you were to take a guess or throw a dart at a dartboard, your odds are only 30%. So if you knew every time you got in a car there was a 30% chance you got in a car accident, you probably wouldn't get in a car anymore.
I wouldn't. Yeah. So, last one. Budgeting is only for people struggling with debt.
I don't love the word budgeting. Spending plan. No,
It's
everyone should have a
blasphemous.
spending plan or a savings plan, however you want to frame it mentally. That makes you feel good. But Jacky touched on it. Pay yourself first, right? You want to make sure that you know where the money's going. Doesn't have to be perfect. Nobody knows where every single nickel goes. And a lot of folks have a spreadsheet, get a little deep, but it's not only for people struggling with debt. What do you think? Do you have a spreadsheet?
I do. I love a good spreadsheet. I would say correct spending plan, but also I think this creating a spending plan and also just having a good idea of where your dollars are going. Sometimes if it not even from a frivolous perspective, but sometimes it just might be, hey, you know what? I just realized I'm spending way too much money at Federal Donuts, right? Um, is that okay? Is it, make it intentional decisions. Are you okay with it? Your $5 coffee every morning. Are you okay with it? And then that gives you the power of where your dollars go.
Exactly. And if you get too focused on the budgeting and spending plan, it can remove all of the joy out of your life.
Yeah.
Like a morning coffee or a cookie around like 2 p.m. on a Wednesday.
Oh,
You know
that
what I'm
afternoon
saying?
cookie.
But you got to be careful because you want to be intentional. But that's why I always say call it a spending plan or a saving plan because budget it gets tight and everybody just wants their Starbucks some days and you just got to get it.
Yeah, that's a good point. So, it definitely doesn't have to be like an everyday thing. I usually check what the spending is like a couple times a year, but that's how I cut the cord a couple years back. I was like, wow, I spent all this money on cable and it's like an extra $120 a month that I do not even use. So, just good just to see where just, the leaks in the system.
And that's what the money's for, right? You go to work to have an income that you can use to enjoy things, right? You should be out enjoying things. You talk a lot about the 95-5 rule. What can you walk through what that is for everyone?
Ooh, yeah, the 95-5 rule is one of my favorite rules of just money management. So the 95, if you're tracking like your income, the 95 is what you're really tracking to a T. You're being very mindful, right? Being as frugal and cost effective as possible. But the 5 is you just be just just throw it around the club, go pop bottles, have fun, go on a vacation, like just spend it irresponsibly.
Get your dog a Halloween costume,
Get
whatever it may
you.
be, whatever floats your boat. But 95-5, enjoying the 5
Yeah.
because you otherwise, what's the point?
Yeah, there's a behavioral element. Like that 5 is kind of like your cheat meal, right? For folks who like really watch what they eat nutritiously, like having that cheat meal helps you stick to the plan the rest of the week. So I love 95-5. Make sure you track that it is the 5 though, because sometimes but yeah, that's something that we picked up a while back, and I think it's really good way to kind of look at it.
Exactly. And one more spiel for you. You have a lot of those fire guys, so they're financial independence, retire early, where they essentially bunk up with a roommate for their entire life and save every nickel they have and invest it so that they can retire at 40. If you want to do that, kudos to you. But then what comes out, and there's a lot of stories where then they almost don't know how to spend money because they
Mhm.
feel so guilty every time they do because that's how they were trained over the prior 20 years of saving. So if you don't, spending is a skill, just like saving is a skill, just like investing is a skill.
That's a good point. And thanks for bringing that up because even not in the fire guys, I think there's some folks that we work with who same thing. You're thinking you save, 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 and then as you get into retirement, you realize, wow, I'm about to enter the biggest period of unemployment in my life, and then they're afraid to spend money. And we've had to say, hey, listen, look at the plan. You can go on that trip. Take the grandkids somewhere, right? It's the mindset has a flip and like, okay, look, we've earned this income, we've saved it, we worked hard for it, and it's time to enjoy it.
Exactly. And that's why a lot of times how we set it up is folks get a biweekly or monthly paycheck from their retirement accounts. This way, there's no question as to what they can spend, will spend, are able to spend as they go through it. Otherwise, it gets like you said, they have this skill of saving, and they're very good at it, and it's hard to spend when the time comes. But this is what it's for. This is the moment when the switch flips, and you get to every day is Saturday.
That's a good one. Every day is Saturday. Yeah. So that is it for all of the myths. Yeah. So thank you all for listening. Julian, anything to sign off before the folks enjoy the end of the year?
No, that's it. Hope it all made sense. Can be a little long winded with some random anecdotes, but always fun. Thanks for joining. Anything comes up, let us know.
Have a good one, everyone.